All right. What's good, squad? It's your boy, you know, the Strat Uchiha. You feel me? But anyways, let's get to it. All right. So I'm gonna start with Square. So people are always asking like how does time frame continuity play into things or whatnot. So let me tell you this. Square, and this is why you mark it. Square is good. Everything as far as starting out on the month, this is the monthly. You can see over here, M. Is everything is good and it's bullish above this. You want to go long when it's above it. All right. Can you go long when it's short, when it's in between this time frame? Yes, but it's kind of like up for grabs at that point because now it's back inside. Even though it technically is a two candle, now it's back inside for the month. So it can go either way. All right. So it was good and directional and everything was green. You could just wait for reversals back to the upside when it was above 258.49. All right. That's when it's two up for the month. Yeah, it's still a green month, but it needs to be two up. So that's what Rob is talking about. You want it above. Is your monthly now higher above your previous month high? All right. Because once it comes back in, now it's fair game. Now you will focus on the shorter time frame. All right. Um, and what I mean by focus on it is let's say you get a signal on the weekly or you get a signal on the daily. Yeah, you could play it, but be very careful. And I got an example for that after this one. All right. So we go down to the week. We see it poked above it on this week. So April 5th, the week of April 5th, it went above it. And then the next month formed a shooter. I mean, next month, the next week formed a shooter, right? So that's an actionable signal to the downside. So if I was long, once I see that shooter, I'm like, if it breaks below there, I'm out of that trade. And actually, you're out before it because your tight loss, your stop loss should be tight. Once you see it reversing going all the way, you should be out that trade. All right. And then you should be looking more setups. It's like when your time frames aren't confirming each other, it's like if you're gonna play it, the lower and lower the time frame is. So it's like, all right, the monthly is now inside of this, right? Especially after the shooter, it's inside. So if I'm looking for setups, I'm looking for it on the daily now. But I know that it's actionable signal to the downside if it breaks below this shooter, which it broke below, it actually kind of gapped down. Um, but yeah, below that shooter, we're going to the downside. And this is where time frame continuity gets mixed up. All right. And why do I say that? Is because once you become inside, go back inside the month, now it's like anything. If you want to go short, you can. And you can play both sides. But you will need to scroll down in time frames for the entry. Now, it is said that when in time frames, it's like when everything is into time frame continuity. But the other thing you got to realize when you're going into full time frame continuity is that there is exhaustion risk, right? There's going to be exhaustion risk. So it may flip and go down to the downside. Also, we know that price likes to take out a range, even if it's by like a couple cents. So it didn't even take out this high really. It looks like they're both at the same level before it reversed to the downside. So it's like once that happened, it's not going up any higher. Now it's probably looking to come down, take out this pivot or take out that pivot before going back to the upside because now we're back below the high of the previous month. All right. So now we're going to scroll down to the weekly. I meant to the daily. We're on the weekly. As you can see now that we're on the daily. Now we have an actionable signal, which this is like 8 a.m. 421 when I'm making this. So if I was looking to go short again, we're already down on the week. So we might not have time frame continuity on a month, but it's no longer a actual 2 up month. The it poked above it and made a two, but now it's back inside. It's going back through that previous range. So now, if I want to, on the daily, I know I'm red on the week. So at least on the week, and if it pokes down and goes two down again, I have week, day, and possible hour time frame continuity. And the thing about this is your hour, day, and week can override your monthly. Your hour can override your weekly. So the hour is always in control. The hour and 30 is always in control. Those can override the higher time frames. And so that's the thing about it is nothing is ever necessarily going to be perfect. There's going to be times when there ain't time frame continuity. It's going to be up to you if you want to take the trade. But since we play options on these smaller moves, we don't have to necessarily always worry about that. But we do want to be cognizant of what those higher time frames are. We want to see what the month is. We want to see what the week is, even if we're just going to trade intraday and day trade. Because if everything ends up setting up on that in that intraday, and your hour pushes up your week and it pushes your week up, which makes your month now go two up, those things can be very explosive. We've seen that with Futu, like especially with it being a double inside week. I'm gonna go over that next. But this is why when it comes down to time frame continuity, and I know this can be confusing, so let me re-say this. If it's not a directional month, right? If it's an inside month and it has a wide enough range, you can play it. You can play it inside month. It's just not wise to play something inside the lower in time frame you go because that range is going to get tighter and tighter. All right. But if you have a big enough month, you can play an inside month. All right. But also, if a month was two up or two down, if it doesn't stay above the previous month's high or below the previous month's low, and it goes back inside, that two up or two down is no longer in force. It's only in force above it. So as you can see with Square, once it came back in, it being bullish to the upside or you know what I'm saying, stuff like that was now negated. It's not enforced anymore. So now you can scroll down to the weekly and see what the weekly signal or the daily signal is giving you. Right now, the weekly signal is a two down. And it's looking in the daily right now, it's doing a 2-1. If you want to play it to the downside right now, as soon as it break below this one, you can hit that. You can hit that, have you a tight stop loss, have you a stop loss at least 10 to 20%, or you can set it at like maybe the body of this one or maybe below it or whatever. It just depends on the price and how much you want to lose, but I would leave it at like a percentage or whatnot, because you don't want to lose too much money. If it goes against you, it goes against you. All right. So on the daily we got a one, so it's two down on the week. The monthly is no longer, it's basically back inside, so it can damn near be considered inside month or whatever, but not really, obviously, because it did poke up and go two up. But it's inside right now. If you went down to the hour, right now you also have a one on the hour. So if it breaks, which is pre-market and then gap down, but if you wanted an early entry on this 2-1, once it went one, then it comes back down to the downside, you could hit that trade, boom, hop in early. And this is how you can hop in early. If you got an actionable signal on your hour, like a 2-1, and then your daily is like a 2-1, you can go ahead and hop in that trade early because you already have an actionable signal here on your hour. All right. So you got three time frames that would be in continuity, which is good enough. Your weekly, your daily, your hour. And if you're going to be day trading, look at your 30 and your 15-minute as well. Because your intraday day trading time frames is your day, your hour, your 30, and your 15. That gives you four time frames. You always want to be looking at four time frames. All right. So if I go over to Futu, go over to Futu, boom. Futu, if I start with the month, before it went crazy the other day, it was still an inside month. It needed to break above 171.96 to go two up for the month. Obviously it's no longer in force and it's actually really dropping bad. So if I go down to the week, you see it was a double double inside week before this week, and when it went open up Monday, it went parabolic. So you knew once it broke above here, you were or to the bottom, but obviously we're going to talk about going to the upside first. If it broke above it to the upside, it would be two up on the week. And when you get double inside weeks, whenever it pick a direction, it's going to be parabolic. It's going to go crazy. So if we go down to the the daily, as you can see, there was actually an actionable signal on the daily to hop in the trade earlier. You know, what we look for is actionable signals. You know, A1 is an actionable signal. If it breaks above the one, that's an actionable, breaks above or below, it's an actionable signal. So you could have got in either way. You could have marked the bottom of the one. Either way, um, it went Monday. That's it picking a side, as well as I'm gonna talk about this one right here. Make that red. Boom. All right, so it broke above it. Let's go down to the hour and let's see what it was looking like on the hour that day. So it just went 2-2 for the hour, April 16th. Yep. It just went two up. So, I mean, you could have hopped in right here once it went two up if you wanted to hop in even earlier. But like I said, you got your signal on the daily, um, because that's your actionable signal. Technically, this right here would have been a continuation. But if you would have drew a box right here, you could have basically said this was inside, really right here, because this is a tight range. And once it broke out of that range, it went parabolic. So you really could have, once it broke above, what was that? 153. And so let me go back to the monthly. All right, so your monthly, I want to change this color, make this yellow. So it needed to break above 171.96. All right. So as you can see, 171.96 is way up here. So it went, you had your actionable signal right here on the daily. It broke above that. Let me change the weekly to a different color. Uh, Change that color to green. You had your actionable signal on the daily. Boom. So you could have hopped in the trade early as soon as it broke above 154.60. Like I said, you could have hopped in on the 1 hour, but that wasn't really an actionable signal. That was a continuation. We don't really like to play continuations unless you're adding to your position because Rob teaches you to scale in. All right. So you had your actionable signal on your daily right here at 154.60. Boom, you take it as soon as it break above 154.60. It also went two up on the week once it broke above 158.84. So boom, it actionable signal on the daily. So now it triggers two up on the daily. Boom, above 158.84, triggers it triggers two up on the week. And then you get up here to this yellow line, 171.96. Boom, it triggers two up on a month. And as you can see from 154, if you hopped in at 154.60 to 171 right here, that's what is that? That's like 17 $17, right? So once it broke above here, you technically could have added to your position once it became two up on the week. Boom. And then if you wanted to again, you could have added to your position just, as it triggers two up and becomes directional on your week and your month, you could have added to your positions and then boom. And then you could have took profit because why not? On a day like that, that's why I like to take profit because as you can see with this big red candle, what ended up happening was there was a public offering. And when they do public offering for shares, that automatically tanks the stock, right? So if you wanted to wait to see if it was really gonna be something that tanked, let's say you didn't hop in immediately when the market opened, even though because it gapped down. Once it broke, so let me clear this off. Move, remove, remove, remove. So boom, once it broke below 152.62, boom, you can hop in that trade and take it to the downside on Tuesday, right? And then this one right here, this 141, I believe that was the week. So let me change that to a different color. White. I'll change it back to white. So let me go back to the daily. As soon as it break below this, now it's gone. So now we got a 2 up, 2 down reversal. As soon as it break below this, where you could have been in the trade with puts, and then when it broke below 141.80, okay, now I went from being 2 up. Now I've broken down and broke the bottom of that one. Now I've gone 3. So that's your 1 bar reversal. So now in the week, technically, it's been a 1 bar reversal. So it was a 1-3. This is your rev strat right here. Your 1 bar, then boom, you got your 3. Starts as a 2 up, fails, comes back through the previous range, breaks below that one, boom. Now you're in the trade. And you could have been in even sooner, like I said, with it gapping down, because public offerings just kill a stock. When they're offering the stock up, they're gonna offer it at a certain price. Everybody's gonna boom sell. Um, so boom, you could have been in. Um, you could have been in once it broke right here, and when it went 3 for the week, yeah, you already been in trade. I don't know why I'm kind of confused myself. Boom, you break it as soon as it go 2 down on the day, and then once it goes 3 on the week, you could have added to your position, and then now your pivots that you want to take out. It already took out this one, take out that one, take out that one possibly. Um, and as you can see, pre-market is already heading down that way. So not all the times will your time frames be in continuity. Sometimes you can take signals on the week. If it's gonna go 2 up on the week, you can see if you have a actionable signal on your daily. Like I said, for right here, it was already a 1 on the daily. So you had 2 inside weeks on the weekly, you had a 1 on the daily. And when you get those ones lining up across multiple time frames, if it breaks all to the same side, hop in the trade on that lower time frame as soon as it break above that one, and then mark on the higher time frame where that one is, and when it break above that one and goes directional, because you can add to your position when it does that. All right. If you have any questions about this video, if I made it any more confusing, just let me know. I'll remake the video. I'm here to do whatever it is that y'all need me to do. Love y'all, Will Squad. This is the Strat, Strat Uchiha. Let's get it.